Good morning, everyone. What's up? What's up? Hope you guys are doing well. Good morning. Today is Monday, April the 13th. Overall markets, as you can see, gapping down here in the overnight session. We are down a little bit here in the pre-market. So we'll kind of talk about what to expect coming into this week after having a huge rally last week in the market. So a little bit of a pullback here. We'll see if the markets do want to fill the gap coming into this week. We have earnings kicking off this week as well with the banks. Earnings season is starting. We have a few other things to keep in mind this week as well for the economic calendar. We do have core PPI, which we'll talk about here in a second. Before we head on to that, what's up, everyone? Good morning, P1. Good morning, B Roots, TW, Maria, Andy. Good morning, Victor, Marcus. Good morning, Seven. What's up, everyone? Good morning, Cody. Good morning, Wisdom, Hazem. Good morning, Knight, Maria, Chris, Cosmic. Good morning, Lamit, Martin, Wakey, Juan, Gerald, Stefan, Priscilla. Good morning, Deuce. Good morning, Robert, Will. What's up, everyone? Sam, Julius. Yeah, what's up, everyone? Good morning. Let's pull up the economic calendar for this week before we get started and before we head on to the charts. Let's kind of talk about what happened over the weekend as well for the reason for the gap down. So overall markets, at least on the future side, as you can see, gapping down here in the pre-market. We end up having a pretty big gap down on the futures. If you're looking at the SPY and Qs here, gapping down about 0.7% on the SPY. As for the QQQ, gapping down another 0.7% here as well. So for the SPY and Qs, down about 7.7%. For the futures chart, bigger gap down. This was the Sunday open, and now you can see nice kind of rally, but pulling back here coming into market open. So both the major indices pulling back here. The reason being was the news that we had over the weekend. Trump mentioning the blockade that we do have that is expected to happen at 10 a.m. Eastern Standard Time this morning. So we'll see if we have more information on that. But that was essentially the news that we had over this weekend. At least coming into this week, the main thing, of course, here is going to be the core PPI data that is going to be at Tuesday, 8:30 a.m. Eastern Standard Time. Going to be fairly key in the market along with the PPI month over month. Besides that, no red folder news for the rest of the weeks. We do have earnings, which I'll pull up here in a second. But unemployment later into the week, that is going to be at 8:30 a.m. Eastern Standard Time. And then we do have a Fed speaker that is going to be on Friday, at 2 p.m. Eastern Standard Time. So the main thing, of course, is the war news that we do have that is currently ongoing. I'd say, right, at least the news that we do have, most likely the major news is going to be in the past, unless we have some sort of crazy ongoing news that does kind of flip the markets. But the ongoing war news is, of course, going to be the most important. And then the rest of the economic calendar plus the red folder news is important here as well. So we'll keep an eye out on the core PPI. The main thing this week here as well that's going to impact the market is going to be the earnings, which we'll talk about here. So we do have earnings this week and the earnings season coming up as well. So what we have at least for this week is financials, right? Banks kind of kicking it off. We have Goldman Sachs in the morning, right? Tomorrow, JP Morgan, BlackRock, Citigroup, a bunch of the big banks are reporting, as you can see here. Morgan Stanley, that's going to be on Wednesday. Other notable names, right? Bank of America. But Thursday, we do have one of the big tech names that is going to be reporting, that is Netflix. This one's been moving nicely. So Netflix has been holding up. Nice continuation compared to the overall market. We'll kind of talk about this one coming into this week. But as you can see, big banks reporting. So that's something to keep in mind. And then we'll have a bunch of the big tech names in the next few weeks. So this is what we have for the earnings calendar. If you are interested in financials, right, keep that in mind. Plus Netflix. That is going to be Thursday after close. So those are the big names that we do have. Charles Schwab here on Thursday as well. With that being said, let's get right into the charts to show you guys exactly what we're looking for coming into this week. Let me grab some water here first, and then we'll head on to the spine cues. Okay. Let's first start off on the higher time frame. So let's first start off on the SPY chart, and then we'll head on to the cues, and then we'll head on to the features here as well. So first things first, let's talk about this on the weekly time frame. As you can see here, if we're looking at the past really 6 months to a year's worth of price action on the SPY, specifically in the past 2 weeks, as you can see, 2 weeks ago, nice kind of lower wick into key levels of support, nice strong candle close, and then last week as well, kind of dug a little bit deeper into that 650, strong candle close here as well. Right back essentially inside of this previous consolidation on where we originally broke down from. So as you can see here for the SPY, nice kind of rally up and towards our 690 and kind of in the middle of the range where SPY ended up gravitating towards. So as you can see right here, based off the weekly chart, there's a couple scenarios that we can be looking for. Number one, as you can see, this weekly candle close pretty bullish inside, of course, this previous consolidation, right? As you can see, close strong inside of its previous consolidation. Every single higher low is kind of being built here now as well based off that 630. Now for the next week and moving forward here on the SPY chart, there's a couple scenarios that we can be looking for based off this weekly candle close, right? It could do a very similar thing it did the past 2 weeks, right? Dig a little bit deeper into the 670 and then rally back all the way up and towards our all-time highs here, right? This is a very possible scenario on the overall markets. I know a lot of people aren't expecting a potential rally back up and towards the upside just based off of the overall market sentiment, just based off all the ongoing things that are happening in the markets as well. But the overall markets, right, based off last week's price action and just based off technicals wise, right, if we dig deep, right, build up these higher lows here on the weekly time frame, we very much well could see our all-time highs here on the SPY, which would be our 700 key psych level. So we'll head on to the daily chart here in a second, but this is a very possible scenario on the weekly time frame. Right, since we are back inside this consolidation, another possible area is if we end up forming, right, kind of a red week here, seller step in exactly where it broke down from, right? Possible is that we could come fill its gap. All right, we should be back here. Sorry for that. If it did freeze, it should be back now. You guys can refresh the stream if there is any sort of lagging issue. Are we back now? Froze. Fine now. Seems to be okay. Yeah, if there are any issues with the stream, you guys can refresh and it should be all good. Okay. So at least for the SPY, as I mentioned, a possible scenario is going to be that rally up and towards the all-time highs. If we reject off this area, right, we could see some sellers step in and a potential gap fill back towards the downside. That is a possible scenario if the markets do want to kind of build these lower highs in the market, which is basically off the weekly time frame. So that's what we have at least on the weekly time frame. If you go into the daily time frame, I think this is going to give us a little bit more perspective here. So last week, right, kind of have these higher lows be built, right? If you're long down from your 630, awesome, right? You kind of have this inverse head and shoulders, nice kind of gap up in the markets here as well on the SPY. So for the key levels moving forward, what we can just have marked out is really this gap fill that we have created, which also kind of lines up with this previous level of consolidation. If you were to just draw out this general area, 676. Moving forward, my key line in the sand is going to be the 676. So what we have here on the SPY, if we can maintain above really the 676 here, I am leaning more towards the upside in the overall markets. As I mentioned, this is the period of consolidation that we have. Originally, before we had that break towards the downside, this was kind of the original war news that we had that dropped price towards the downside. So this 676 general area is what we had, right? The reason why we dropped was with the war news, everything else going on that kind of pushed the market towards the downside. Now, of course, if the war is to be over, right, we can expect a potential kind of rally back up and towards that 700 key psych. But for moving forward here on the SPY, the key levels that I do have marked out is going to be that 676. If we can maintain above this level, I am leaning more towards the upside. Another possible scenario, if we break above our last week's highs, 684, leaning more towards the upside here as well for a push up and towards that all-time highs, 700 here on the higher time frame. So as long as you can maintain this general area, 672 here on the higher time frames, I am going to be leaning bullish on the SPY for continuation towards the upside. Only way I am going to be leaning a little bit more towards the downside here is if we can close underneath this really gap area, which is the candle low here that we ended up gapping up, then we could see this potential gap fill towards the downside. So let's say, for example, SPY kind of consolidates in this general area, builds these lower highs here on the daily time frame, gets back underneath this daily gap, right? Gets inside the daily gap, trades back underneath, stays heavy. Then we can look for this trade back down in towards the previous day lows, which would be this gap fill area, right? This is a possible scenario, as I mentioned, for the SPY and Qs, but that is only going to occur if we can break underneath this gap, 676, and push back towards the upside. Let's go into the hourly chart here now. The key levels that we do have marked out as well now is going to be our 676. What we also have marked out is our 672. So coming into market open here, we do have a gap down. So we have a gap down in the overall markets. If we're looking at the futures, we bounce here off our 671 coming to market open. Now, these are the levels that we're going to have marked out coming into today. So if we do want to see some upside coming to market open, really it's going to be longs above our 677 for a push up and towards our previous day close. So this is a possible long scenario, another long scenario right off the bat for a continued push towards the upside. Or now if it comes all the way down in towards our last week's key pivot level, 672, potential bounce play here off essentially our pre-market lows here on the futures, which would be this 672. So this is what we have for the SPY coming to market open. If we do want to see some upside, if we want to see some downside on the SPY, the key levels that we are going to have marked out is going to be this pre-market high. If we reject off this area, fade off this area, we could see a push down in towards our pre-market lows, or now underneath our pre-market lows, right? A push down in towards that 672 is in play, right? In my opinion, shorts are going to be a lot more difficult. Just because we had a bullish up close candle the past 2 weeks, we could see a little bit more downside to start off this week. Similar to the past couple of weeks, we kind of dug a little bit deeper to start off the week, and then we end up having a nice rally, right? Similar thesis, right? With this gap down in the overall markets, we can see a little bit more weakness coming to Monday morning, but we have key levels of support, which is that 672. And if we reclaim back above that 670, very much well in play for a push back up and towards that full gap fill. So that's what we have for the SPY coming to market open. If we go on to the ES, the key levels that we have marked out is really this 6780. So this is the area that we end up gapping above. Right now you can see this would like to see turn into support if we do want to see any sort of continuation higher. So for the ES coming into market open, very much key here. You can see buyers basically stepping in off this level here in the overnight session, and when the futures gapped up on Sunday. So moving forward here, key levels, as I mentioned, is going to be our 6830 along with this 6790, So moving forward, if we are looking for upside here on the SPY, there's a couple scenarios that we can be looking for today in specific. The bounce play here offer key level of support for this continued push back towards the upside. Then the possible scenario above our pre-market highs, we can see this gap fill that we created here over the weekend. So we do have a gap fill back towards the upside here on the 15-minute and the hourly time frame. So we could be looking for the gap fill coming into market open. If it does want to drop, then we could be looking for the bounce, basically right off our key level support, multiple touches here as well, 6790 on the ES. All right, now let's go on to the QQQ. Very similar thesis here. Let's start off on the weekly time frame, which is going to be key. As you can see here, overall markets kind of consolidating in this general area right throughout December, the start of 2026 here as well. And then we had this original drop towards the downside. So original drop towards the downside in towards key levels of support. And now you can see buyers are stepping in aggressively, right? In my opinion, if you're looking at this on the weekly time frame, with this big weekly candle close here on the SPY and the Qs, This to me looks like a trade back up in towards our all-time highs here, just strictly speaking off technicals, right? If we're not talking about other things that are affecting the markets currently, based off technicals, this to me looks like a push back up in towards our all-time highs on both the SPY and the Qs. But basically, for the QQQ, the weekly time frame, nice strong weekly candle close, another weekly candle close last week as well, pushing it all the way back up inside the middle of the range. Right now, we're at our 620, which, as you can see, if you're to draw out this previous consolidation, I'd say we're basically right dab smack, right in the middle, 620 here on the QQQ. The next weekly candle, as you can see, that can form here on the Qs. If you do want to see push towards the upside, there's a possibility that we can see that next level, which would be that all-time highs that I'd mentioned, right? If we go back onto the daily time frame, the key levels that we have marked out here is going to be this previous level of support, which is our 590, and then we also have a mini level of resistance, which is that 615. So you can see Qs essentially kind of traded up in towards this range that we had, which was the area that we broke down from earlier in the year, as I mentioned, right? This was essentially when we had that original war news in the overall markets, and we just kind of consolidated here in this general area before we end up heading lower. So for the Qs, right back up in towards the 615, as I mentioned, we could see a little bit of sellers. So far we have this kind of gap down in the markets. There's really a couple scenarios that we can be looking for on the Qs with a little bit of a pullback here. And then we also have that gap fill as well. So for the Qs, of course, if we can break above our previous day highs, break above our weekly highs, break above the 615, that would ultimately be the most bullish push for a move back up and towards that all-time high 640. So that'll be the number one scenario, right? Not as likely, right? Still holding up these higher lows, so this is a possibility. But this would have to get above key areas, right? Would have to have a really big rally. So this is the number one scenario that could happen here on the Qs for some upside. If we do want to see another potential upside move, where price could even come all the way back down in towards the bottom of the gap, right? Kind of break below, fail, and then we end up having that reclaim back above that 615. Right, could still very much well be bullish if we bounce here off that 615, sorry, that's 600, which would be that gap fill that we have. Another possible scenario on the Qs, it could honestly come all the way back down in towards that 590, which is this previous level of support, also build up a higher low for this continued push all the way back up in towards our 615 and above here as well. Kind of complete that inverse head and shoulders here on the daily time frame. We kind of had a mini one here. But if you're looking at this on the higher time frames, right, you can say this is kind of your period of consolidation. You have your head here, and then you have your right shoulder as well. So we could even come all the way back down in towards that 590, all the way back down in towards this key level for a push back up and towards that 615 here on the higher time frame. So that's what we have for the Qs coming into market open. On the higher time frames, if we go on to the hourly chart here as well, the key levels that we have coming into market open here is going to be our 602. Other levels that we have marked out is going to be that 610. So coming into market open here today, what we have marked out, as I mentioned, 609. If you do want to see a pushback towards the upside, a little bit of reaction here on the pre-market, reclaim back above, hold above our 609 for this pushback up and towards that previous day close that we do have. As long as you can maintain above our 603, it could come all the way back down and towards that pre-market lows bounce, or that 603 on the higher time frames for that pushback towards the upside. So that's what we have for the Qs coming into market open here. If we do reject off this level, then we can see a pushback down in towards that 609, or now underneath that 605 for that pushback down in towards our last week's key levels, which is that 603 here. So this is what we have on the Qs and SPY coming into market open. Now let me go on to the NQ chart. So the NQ chart, as you can see, bouncing off our key level support here, which happens to be our 24,900. This is a key level here on the higher time frames, multiple touches here. Now, as you can see, we have a mini gap fill back towards the upside. So for the NQ coming into market open here, at least today, the key levels that I do have marked out is going to be this pre-market high along with our previous day lows. If you do want to see some upside, reclaim back above for this continued push up and towards the full gap fill that we have created. If we reject off this area, then we can see this push down in towards really this like pre-market lows, but I am leaning more towards the upside here on the overall markets. If we're looking at this on the hourly time frame, as long as you can maintain above really that 24,900, we're going to lean more towards the upside here based off of last week's price action. So this is what we have for the NQ. If we trade inside the gap, then we could be looking for this gap fill towards the downside. But as long as you can maintain above that gap fill, we are going to lean more towards the upside on the overall markets coming into this week. All right. Now, with that being said, let's go on to a few other indices here. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay, let's go into SMH. Makes sense. Analysis. Volume for the weekly has been low, even though. So one thing about volume is, right, I'll have it on the other chart. So I'll take a look at volume here on the weekly outlook. At least for the higher time frames, generally speaking, if there's lower volume and the markets are rising on lower volume, that's a good indication that whenever the volume does pick up, we're going to have a big move towards the upside. So what I always say is markets can rise on lower volume, and that's very bullish. But if we're dropping on lower volume, that's indication that the markets are going to bounce. So if we're dropping on lower volume, that's not a good sign that the markets are going to end up keeping, that's not a good sign that the markets are going to keep dropping, right? Especially if it's on lower volume, right? It can easily get bought out. But if the markets rise on lower volume, that's a good indication that whenever the volume does pick up, that's a good sign that we're going to end up getting a really solid move towards the upside. All right, let's talk about now the SMH. So SMH here was our leading basically indice towards the upside here, broke above our all-time highs last week. And as you can see, look how bullish the SMH is, right? This is the semiconductor ETF. If you're looking at this on a weekly candle perspective, as you can see here, nice key bounce off our support level. This weekly candle close, really strong buyers at our all-time highs, right? We're kind of consolidating in this general area, right? Within 1 week, right? Already back at our all-time highs. So moving forward here on the SMH, if we're to draw at our all-time highs, what we like to see is it kind of dig back deeper into our previous all-time highs level and form and continue higher towards the upside. So this is what we have for the SMH. So we're expecting a little bit of a pullback down in towards our previous all-time highs. As long as you can maintain above our 420, right, this is going to be the next leg towards the upside here on the overall market. So fairly bullish on the SMH, right? Could we potentially kind of reject here and kind of fail and push all the way back down inside this range? This is a possibility here as well, but not as likely unless the SPY and Qs flipped here as well. So of course, we're going to maintain a bullish stance on the semiconductors and everything else, especially with the markets reclaiming back above key levels. Unless the overall markets rejected, kind of filled the gap on the daily time frame, then we could be looking for a potential kind of rejection here on the SMH. But based off the higher time frames, we're going to maintain a bullish stance above 420 for this continuation higher here as well. So if we go back onto the daily chart, key levels that we have marked out now as well. We can just mark out this general area, right? 420. You can mark out our 420 to our 425 here if we want. But for the SMH, if we can maintain above this level here, previous level of resistance, now we broke above it, hold above it, potential push up and towards our all-time highs now and above that 420. So that's basically our key level. If we maintain above 420, we're going to maintain a bullish stance. If we break underneath that 420, then potentially we can see a reversal, right? Similar thing to the overall market, right? We end up having a gap up with the news that we had last week. If we break underneath that 420, break back inside the gap, then we can see this push down in towards our 400 key cycle, which would be the higher time frame key level. So that's what we have on the SMH. If we go into the key levels coming to market open that we have marked out, in this case today, we just have our 428. We have our high, multiple touches. This is our previous all-time highs here as well. So as long as you can maintain above that 428, continuation towards the upside, and we can see this gap fill back up and towards that 438. If we break underneath then we can see this push down in towards that 420 here and below on the SMH. All right, now with that being said, let's go on to a few other tickers. Let's actually go into IWM quickly. Nice kind of gap up consolidation here on the IWM. If we're looking at this, the key levels that we can have drawn out is just going to be that 263 bounce play here for this gap fill back towards the upside, or of course longs above our 263, shorts in play, rejection, or now underneath that 258 for that continued pushback towards the downside here as well. Okay, now with this being said, let's go on to some tech names and what we have coming to market open. Going to go over some of the Mag 7. If we do have enough time, we'll head on to some other tickers here as well. So if you guys do have any charts or any tickers you'd like me to go over, you guys can drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like. Let's see if we can get to 200 likes. And of course, if you guys haven't joined the free daily watch list, that is in the description below as well. All right, there's a couple questions. Do I only trade out? Primarily options, right? I trade futures every once in a while as well in the major indices. But price action, really the different asset classes that you can trade, it's fairly all the same. There's maybe a little bit different things that you have to look for, right? Major indices, there's a lot more kind of mean reversions and reversals compared to the tech names. If you're trading stocks, right, there's a lot more kind of trending markets. But besides that, all the setups are fairly similar. All right, let's go into Tesla. How many tickers should you look at when you're starting out? 2 to 3, right? There's a lot of tickers that you could be looking for, but try and stick to 2 to 3 watches, and that's going to be key, right? Any more than that, especially if you're a beginner trader, you can get a little bit confused. So for Tesla, this one right back down in towards our original consolidation level. Of course, this one has been showing a lot of weakness with the SpaceX IPO as well. So this one coming back down, and we kind of talked about this. It can kind of come back down into this period of consolidation. It can dig even a little bit deeper down in towards that 320, which is a higher time frame key level here as well. But based off the weekly time frame, let's kind of zoom in here for a second. So original consolidation here on Tesla. Now we're digging a little bit deeper. You can see a little bit of a lower wick here, not a huge lower wick on Tesla. No like previous candle closing above its last week high, indicating strength here, right? If we're looking at this from a bar by bar perspective, right, every single week has created a lower high compared to the overall market, which as you can see, look at the difference, right? Lower highs are being built, but as soon as now we ended up having a green candle close and a huge gap back towards the upside. Within one candle, this basically broke back above our previous like 6 candles back towards the upside, right? Tesla, right, a lot weaker here, right? Could we form like a big bullish candle and break back above its previous highs? Very unlikely, especially with the markets bouncing, Tesla not really doing anything. So one of the weaker tickers, based off of the higher time frames, if we're looking at this daily time frame here as well, lower highs being built, really not too much to say on Tesla. Every single pop is being shorted. So if we're looking at the key levels coming to this week, we have our last week's highs marked out, right? We could see some sort of potential mini downtrend form, but even then Tesla's going to have to break back above, reclaim back above key levels if we do want to see any sort of continuation towards the upside. So key levels that we have marked out coming to this week is going to be our 362. We have our 340s. And we have our 348, and we also have our 352 here as well. So for Tesla, the key levels that we have marked out is going to be our 348 coming to market open. We have our after hours highs here on Friday as well, which is at 352. If you do want to see upside on Tesla, primarily above our previously highs for continuation up and towards that 352. If we show a little bit more weakness coming to market open, then we're going to be looking for that bounce play here off that 340 on the higher time frames. Tesla is one of the names that I am leaning more towards the downside. The key levels of support that we have is that 338. So for Tesla coming to market open, if you do want to see downside, potential kind of pop and fade here off our previous day highs, you can see multiple touches here as well. Another rejection here off that level for a push down in towards that previous day lows. Another possible scenario underneath pre-market lows. You can see push down in towards that previous day lows, 342 here on Tesla. So that's what we have coming to market open. Not really too much to talk about with the overall markets bouncing. We'll keep an eye on this name if the markets do want to head lower. As for Nvidia, let's talk about this one on the weekly time frame. So Nvidia, nice bounce right off our key level of support. We're expecting some buyers to step in. Now you can see it's basically trading back up and towards our top of the range, which happens to be our 190. So as you can see here for Nvidia, there is a possibility and a good chance we kind of just reject off this level since we've been just consolidating in this general area. Rejection and then come back down in towards that 180. If we look at this on the higher time frames, right, we could see some sort of kind of inverse head and shoulders. I'd say it's playing out a little bit longer, but multiple rejections here. The next level is going to be that reclaim back above that 190 on the weekly time frame for a push up and towards that all-time high. So whenever we do break above 190 on the weekly chart, this is going to be in play for a push back up and towards our 212. At least for now, there is a very good chance that we kind of just reject off this general area and we come back down in towards that 180. We do have a small gap fill here as well towards the downside that we could possibly fill. So for the Nvidia chart, the key levels that we have coming into market open so far here on the hourly time frame, right, higher lows are being built. So we're going to maintain a bullish stance on Nvidia above that 184. Let's go into the 15-minute time frame. So as you can see here, this is our Wednesday's highs of last week. If we can maintain above that 185, bounce off our 185, we can see a push back up and towards that full gap fill, 188. So I'm leaning more towards the upside here on Nvidia. Another possible scenario above our pre-market highs, push up in towards our gap fill level here as well, 188. So bullish here on Nvidia to start off the week as long as you can maintain above that 185. If let's say price kind of consolidates in this general area, breaks underneath, holds underneath our 185, then I'm going to lean a little bit more towards the downside. But there's a possible scenario for Nvidia, right? Higher time frame is bullish. 1 hour chart is holding up here as well. This could very much well be kind of a look below, fail, reclaim, and then we end up having that reversal trade back towards the upside. So semis, in my opinion, is something you definitely do not want to look for shorts. SMH, of course, is one of the most bullish names. So a lot of the semiconductors, right? AMD is definitely something you don't want to short. Nvidia is showing a little bit more weakness. There's a couple more leaders on the semi side with some memory names here as well. But SMH all-time highs, right? It's going to be a little bit harder to short semiconductors. Let's go into AMD. Let's go into the hourly chart here, sorry, weekly chart as well. This one bounced off our key level support, kind of defending the higher time frame gap fill that we had here as well. So for AMD, this to me looks like it's kind of going from our range low back up and towards our range high. So I would like to see a trade up in towards potentially our all-time highs here, 260 on AMD based off the weekly chart. This one breaking outside of its consolidation last week. Had this gap here as well. This was the gap earlier from earnings back in February. Nice kind of consolidation here, broke above. Nice continuation towards the upside on AMD. So moving forward, the key levels that we have coming into today, based off of the higher time frames, what we have marked out, if you can see on the hourly time frame, nice higher lows are being built. The key levels that we are going to have marked out is going to be our 234, which of course is a little bit farther away, but now we can mark out that previous day highs. We can mark out this level. Sorry, this is going to be our previous day lows. We can even drag it all the way back down in towards the high that we created here. This was on Thursday of last week. But AMD, nice kind of trade higher on Friday. Now we can just mark out this period of consolidation here. Since we're kind of farther away from our previous day highs along with our previous day lows, we can mark out this period of consolidation, pre-market levels above our pre-market highs, push back up in towards that 244. Previous day close here is in play. If we break underneath that pre-market lows, the really next level support all the way back down in towards that 338, which is a little bit farther away, but still be bullish if we can maintain above that 338 here on the higher time frames. Preferably, we just see that break above. Yeah, we should be back here now. I'm not sure what the issue is this morning on the stream, cutting up a couple times here, but if you guys do have any issues, you guys can always refresh the stream. But that's what we have here on AMD. Let's kind of go on to a couple more tickers. Sorry, we are running a little bit short on time and I've only been through a couple tickers. But Apple, this one, period of consolidation. The key levels that we have coming into this week here on Apple is above our last week's highs. This one kind of consolidating a little bit more. So Apple above our 260s in play. Google, a couple of rejections here, but higher lows are still very much well being built. Google, I like to see maintain, kind of fill the gap. So a lot of these names, I like to see that gap fill towards the upside. Microsoft, this one's been weak compared to the overall markets along with Tesla. Meta, nice kind of push towards the upside. Key levels that we have marked out coming into today is our 636. Other levels that we could have drawn out here as well, which is our 625 reclaim for a pushback towards the upside. Amazon. Amazon's one of the names that is showing a lot of strength here. If we're looking at this on the weekly time frame, consolidation here, look how strong this weekly candle closes. For Amazon, the next levels that we do have is all the way back up and towards our 250 here. So we filled the couple gaps that we created when we ended up gapping down. For Amazon, higher lows be built. Let's see a push up and towards our 250 coming into this week. Key levels that we have marked out is going to be that previous day highs along with that previous day lows. We actually also filled the gap as well coming to market open, but above our previous day close, continuation higher, above our previous day highs, continuation higher. It could even come all the way back down in towards that 234 and still be bullish here on the higher time frames as well. And then for Netflix, this one does have earnings this week, so we'll keep an eye out on this one, but fairly bullish here coming into earnings. Daily chart shaping up fairly nicely here as well. If we're looking at this on the weekly time frame, you can see nice bounce, kind of overshot this key level of support, but buyers stepped in once it ended up having that reclaim, kind of created a nice little flag pattern here on the weekly time frame. But the area that we broke down from on Netflix is our 112, right? Potential room all the way back up and towards our 108 and our 112 here on the weekly time frame. So we can see some continuation, especially with it having earnings this week. We'll keep that in mind. But now we're above our previous day highs. We're above our last week's highs here as well for Netflix. As long as we can maintain above key levels, we are going to be leaning more towards the upside for a push up and towards that 104. So let me go over some of the main things to kind of keep an eye out for coming to this week. We'll go over a couple more tickers here in a second. As I mentioned, we are running a little bit short on time, but the game plan coming to market open here today for the overall market is looking for the higher lows to be built, right? Last week, we're fairly bullish, big gap up in the overall markets on SPY, right? As long as you can maintain above key levels, I am going to be leaning more towards the upside. Preferably, we just kind of build higher lows and reclaim for a push back up and towards our gap fill that we've created here on the Qs. Similar thing here with the SPY. This one's lagging behind just a little bit. If we can reclaim back above our pre-market highs, push back up and towards our 680 here is in play coming to market open, right? If we're looking at this on the SPY and Qs, similar thesis, right? Higher lows, bounce off key levels of support, leaning more towards the upside. ES, similar thing. Bouncing off our key level support, reclaim, push back towards the upside. Only way we're leaning more lower is if we have strong rejections where we could be looking for a mini kind of short for just a scalp towards the downside, or if we're underneath that gap fill, right? If we're underneath or we trade inside the gap, that's when I'm going to be a lot more neutral and flip potentially even bearish underneath our key levels of support here on the SPY and the Qs along with the ES and NQ. But until then, I'm going to maintain a bullish stance here on the markets. As for my main watches coming to market open, I am going to be long semis. Similar thing, right? Semiconductors have been very strong, so we'll keep an eye out on Nvidia, offer 185, AMD for potential break above our pre-market highs. If we go into a few other tickers here, right, look at how bullish, right? Tickers like AVGO, MU, SNDK, AVGO, super strong bullish weekly candle, really back above all this consolidation that we've had. So breaking outside this range, very unfortunate that my stream's crashing out. I always say this, but I'll have to update OBS, or maybe it's like a YouTube issue. Yeah, we should be back, but I'm not sure. It's like a YouTube issue, or maybe it's my internet or OBS or something. But keep an eye out on like AVGO, a lot of other names that are fairly bullish, right? MU, SNDK is at all-time highs. Intel was one of the main names that we talked about last week. So keep an eye out on all these semiconductors for continuation. Overall markets, we're looking for that gap fill back towards the upside as well. But yeah, that is going to be it for me today. We'll go over a couple more charts tomorrow once we do have more time. But hopefully, you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. And I will see you guys all tomorrow. All right, take care, everyone. Have a great rest of the day. Peace.